By popular demand, my business and property business lockdown rescue series of webinars, I'm getting weekly updates from Ajeet Khundi. He's a mortgage broker. He's up to date on what's happening in the current market situation. And if you'd like to know exactly what's going on, don't miss this webinar. If you have joined us on Facebook, for the first time, we're doing a Facebook Live webinar as well as the webinar at the same time. I'm just about to go live onto.
The broadcast is now starting. All attendees are in listen-only mode.
So, a very good evening to everybody. Welcome to the 10th in our series of business and property business lockdown rescues, where we're talking to different industry experts, millionaire investors, and with experience. Yesterday we spoke to a Rick surveyor and London estate agent and property investor. We've had my architect on here, and last week we had Ajeet Khundi, and I'm happy to say he's come back again to do his Friday night update. Literally, Ajeet, you're unmuted. Good evening to you.
Hi there.
Hi, so yeah, literally we had a conversation last week. We spoke midweek, and you said there's been a few changes and bits and pieces that have been happening in the mortgage market at the moment. So how would you like to update us with what's going to happen if you actually apply for a mortgage at the moment, or if you'd applied for one, what's happening with it?
Okay, so lenders are changing criteria every day, changing policy every day, which is a bit frustrating, but from where they were sort of 2 weeks ago to 10 days ago to today, is they are moving and they are coming back towards more normal lending or pre-corona lending. So we've seen buy-to-let lenders start to look at desktop valuations now, which has been a real godsend, and will enable the buy-to-let market to start to get to offer stage, which would be a really good, really positive step. The only difficulty there, I guess, is going to be for a lot of people that are looking investors right now. You want to be there when the valuer gets there, sort of talk them through the deal, talk them through the property. It just helps you with the evaluation, of course, but it's good. It's a good step in the right direction anyway to know that there is possibility to get a desktop valuation buy-to-let, which was a no-go about 10 days ago.
So how do you arrange to be there on the survey when the surveyor normally picks the keys up from the estate agents?
So what's the difference then? So you broke up a little bit
Yeah,
there.
not normally. Hang on. If I'm breaking up, that's not a good sign. Let me just ask people if they're getting a good reception this evening. I'm just waiting for someone to type a message to me, please, if you wouldn't mind. Give me some feedback on the quality of the call, whether it's okay or we're struggling, or
That's a bit better now, to be honest.
It's a bit crackly. It's not great. We can hear 5% robotic. All right, listen, I'm just going to switch over to my 4G thing again. Normally takes a few seconds to settle down. Andy, you just listen out for that door cracking in the wind. It was right. Hopefully, if you give us some feedback now, if there's any problems with it, with the sound, it'd be good to get some feedback. Okay, so yeah, my question to you was that if you're going to do a survey and the surveyor you want to meet the surveyor there, how do you arrange that? What do you normally do? I know what I used to do with your dad. Surveyors used to ring me for the appointment, and I used to arrange the keys for them. And I used to use my middle name, so I knew it was a surveyor calling me. And literally, I would always just then arrange the survey and either turn up with the keys myself or get the agent to turn up with the keys with me. But I always book the appointment, because if you leave it for them to book the appointment through the estate agent, they don't always tell you when it's going to happen.
So what we do is we put the applicant's name as the contact. Now we always have to put a reason why. A lot of reasons times we say that the seller is sort of vulnerable, using a reason as to say why the vendor would need to be there. The estate agent's busy, the estate agent can't make it out. I mean, I guess at this current time, it's quite easy for us to say staff are being furloughed, there's not a lot of staff at estate agent, and therefore we are having to, the applicant has decided to do the viewing and do the survey with the surveyor. So it works quite well at the moment. Without the coronavirus situation, it will just be putting the applicant down as a contact person, and they would book it in directly. We just have to give a viable reason as to why it's the applicant rather than the vendor or the estate agent.
Yeah, making sure that you actually take the comparables with you, and sometimes they'll use them and sometimes they won't, but if they're being particularly lazy, they will use them, and then you can have more favourable comparisons. They just worried about their insurance, so as long as they've got some comparisons that work for their insurance, then they're normally all right.
Yeah, and it's quite difficult at the moment. Obviously, if we go desktop, then you've got no real cause to come back. And some lenders have even said we do desktop valuations, and there isn't an appeal process. And they've actually taken that away. So that's the sort of the other side, the flip side of the desktop valuation, where it's difficult for us to negotiate upwards potentially. Where if you do meet, as Ben said, if you meet a surveyor at the property and you speak to them, you can get them, turn them around, you can get a feel for what they're looking for, and you can actually talk them up to the valuation that you need.
Okay.
Which again, you can take that away from us right now. But it's a good step in the right direction that we can get desktop valuations, and especially if we're looking at things like potentially a 60% loan to value deal could work in a given scenario. I was doing one with one of the mentees, Stuart actually, Glenn, and Stuart said that a 60% LTV proposition would work for him. So if that's the case, then there's less there's less pressure on the surveyor at that point for a desktop valuation as well, because even if he's got a leeway, he's only doing 60% loan to value deal on that situation, so he doesn't have to. He's got more margin for error, so he's more likely to come in where we think he wants to come in.
Yeah, Stuart, I know, is actually working in quite a cheap area, but buying cheap enough, refurbishing and getting all his money back out, plus a bit on every deal. So yeah. He's doing probably 2 a month at the moment.
Yeah.
Okay, so what alone?
Just on that as well, Ben, so Stuart's doing a cash flow evaluation, which it's still working. The deal we spoke about in the mastermind, where they are doing day one valuations on cash flow valuations and room by room rents above 6 and above, because that's the sort of the peak of where it works. From 6 and above where we start to see the real sort of increase in value. Land Bay are still doing that at the moment, and they're still looking at doing day one valuations on a cash flow valuation. Currently, they're capping it at 60%, but anticipate, given where they've moved from and where everyone's moving, anticipate that's going to be up towards the 75% mark next week.
So basically, if someone came to you tonight, tomorrow, and said, look, we've got a property we want to mortgage, we need a 75% loan to value, traditional buy to let, what are you going to do for them?
So yeah, we can get that. We can actually even get them up to 80%, which the lenders are doing at the moment on 80% loan to value. So we have lenders at the moment who are still lending their current lender book, their current buy to let product range. So we can do 75 and 80% loan to value products. We can do day one remortgage at the higher value of the property. So if you have purchased it at auction, or you have an auction deal, or you've done a deal with a vendor directly, where in this current market, it's a really good market right now for the buyer to see if you can get some deals done and get a purchase price that you've got with the vendor. We can get you a day one remortgage at 80% loan to value on day one, if that's what we need, because it's more amount of work to be done.
And that's loan to value, not loan to purchase price.
Loan to value, yeah, loan to value we can do.
So does that?
It's a bit tighter. I know it wasn't pre-corona. It was a lot easier, and it wasn't as stringent. But as long as you've done a little bit of work to it, it'll still go through in the same way, and we can get underwritten and done quite quickly still, actually, because there's not a lot of business out there in terms of people applying. The reaction times are a bit slower, but we can still get sort of to offer in probably about 2 weeks or so, I'd say.
And did you have anyone getting more than the purchase price back when they were refinancing to value?
Yeah, I've seen a number of those. People getting sort of purchases at 100 grand, putting down 25% to purchase it. A month later, we're revaluing it at sort of the 175 mark, pulling out 112, 115 grand. Therefore, they're taking their purchase price plus paying off the bridge loan or paying off however they finance the purchase and the refurb costs. So yeah, we've seen people pull out more than their deposit.
And what about actual day one, or is it only used in my system that works?
So yeah, your system is the better way to do that, definitely, especially if you know the vendor. But if there's genuine reason for why you've got it below market value, so let's say it's a probate case and someone needs to get rid of a property, so that's why selling it below market value, or if they put it, they need to get rid of them, they're emigrating, get rid of their portfolio. There's been tax law changes, as everyone knows, for portfolio landlords. So a lot of portfolio landlords are looking to get rid of their estate just to cash out. So because of that reason, people are getting properties at more cut price really if they're buying 2 or 3 together. And if there's a genuine reason for why you're getting below market value, we can do day one refinance at the higher price.
Okay, so I'm going to start asking anybody if they've got any questions at all this evening. It's for you. If you want to either type in the box or you would like to actually pop your hand up and I'll come to you and you can ask it directly. We've had a question from Ben, and Ben's actually said, so on a desktop valuation, do they still visit the property? No.
They can do. Generally, they don't, but they can do a drive-by. They drive by the front of the property to make sure it is there. But in general, they don't go out to the property. They won't do. They'll just look at it online. They'll have a look at pictures on Google. They may even ask the estate agent for pictures and look through that way and have a look, and then say, "Well, actually, this is what it's like."
Okay, cool. Now I've got Richard Abrams got his hand up. Let's just go to Richard. Hi Richard, you need to unmute yourself at your end and then you can ask your question. Hi Richard.
Yeah, hi there. Hi. Question I have is I'm currently halfway through a refurb at the moment. I've put it on hold until the supply chain gets back to normal. Now, my question is, first time landlord. It's HMO, so specialist buy-to-let products. Are they still available? So I was told there were a handful before Corona. Not too sure if things have changed now.
Is that with no experience and the first time HMO landlord, yeah?
That's correct, yes.
Okay, over to you.
They are, it's difficult in the current climate. So pre-Corona, you were informed correctly, pre-Corona there were lenders out there who would do HMO for the first time, but it was limited anyway. There are lenders at the moment who are actually pulling all the HMO and multi-unit block products off the market right now. So I'd say at the moment the right thing is probably to hold fire on your build, or maybe not hold fire on your build, but just it will take the refinance element. It will have to also probably put on the back burner for now because there are lenders who are struggling just to lend experienced landlords and HMO. So first time landlord HMO. It's going to be a bit of a tough one to place.
So if a first time owner landlord had, like say, run several rent to rent properties, and does that qualify as being an experienced landlord?
It can do, yes, it can do. It can count in that way because you've got experience to show. As long as you're showing some detail on your tax return, let's say 302, which not everyone does, obviously, but as long as you are showing something on there to show that you have got that and you have the tenancy agreements in place, you can prove that you have been renting property out to people. It is possible, yes. Most people want you to be an owner and see that on land registry, but if we can prove that you have experience in the area for 12 months, then that does count.
Okay. Richard, could I ask you, say, have the builders stopped work because they wanted to stop work, or have they stopped work because of a material problem?
A bit of both, really. I mean, I was in a situation where I'd financed the start of the project with a small personal loan, and I was awaiting for a bridge to be processed. And then at the 11th hour, the lender reduced the terms. It was initially 75% loan to value of what I purchased the property for at the auction, and then I was contacted to tell me that it's been reviewed and they can only offer me 50%. I spoke to the builder. Generally have a good relationship with him. I've used him previously, and I just made a decision that until the supply chain is resumed, I didn't want to be on a bridge product, essentially a secure finance product. If there is going to be potential this lockdown goes on for a long time, I don't really want to risk any possession, so I'd rather put things on hold, keep my head above water until the situation becomes clearer. And that's pretty much it, really.
Sure. Okay. Well, I'm sure you can stay in touch with Ajeet, and Ajeet will make sure if there's any other products that are available that you might not have heard about, you might be able to help you along them lines.
One final question that I had is, I was contacted by a colleague, because I work in local authority, contacted by a colleague, and he made me aware that there's a lot of, it goes back to what you spoke about, there's still some opportunity in these awful situations. I know a lot of the local authorities, they do need properties for homeless people, domestic violence, all sorts. Even companies like Serco, they require HMO properties, self-contained units, even 2 bedrooms, 3 bedrooms, etc., etc. Now, how is that viewed in terms of getting a mortgage if you have a commercial lease to a company such as Serco? Are there companies that offer that, or I'm assuming there are.
Well, let me just answer part of that, Ajeet, and then I'll pass it over to you. One of my clients is actually getting on a commercial valuation, which is an income multiplier. Normally they'll take 80% of income and multiply it by 8. But because it's gone out to a housing association who want to rent it permanently, they're actually valuing it higher. They're actually taking 100% cash flow times 8. So sometimes that can work in your favour. Ajeet, over to you.
Yeah, so there are lenders who will look at that as well. They will definitely, at the end of the day, to your point there, Richard, as long as the property is let out and is on a contract, most of them want an AST, obviously, as a standard process. When you HMO, you have multiple leases, multiple tenancies, so you have multiple pieces of documentation. Now, if you then got a contract with a company such as Serco, you have that contract in place for them to rent it out, it still has set viability. It will be let out over that period because it's actually more secure, because as Glenn said, you can get 100% of that because it's been paid for almost in advance, because they're guaranteeing that rent to come through, aren't they?
Yes, in essence they are. I just heard that some lenders do not allow subleasing. Some of them can be convinced, some are more accepting towards it. I guess it just it varies, doesn't it? But you're best placed to answer that question more than me.
Yeah, exactly. It does. I mean, a lot of these things when we talk about pre-corona, it was a lot easier to say, well, they will do it, for example. But in the current climate, as everyone's changing at the moment, people are pulling back. And I'll give an example of Ken Reliance, who would do, as Ben knows, would do almost anything, actually, as long as you agree they'll lend to you, and as long as you had 4 walls in the building, they would lend on the building. They completely stopped lending at the moment and not taking any new applications. So it's just a bit of a wait and see where the market's moving to. But part of the school, as I said, is to see what's changing on a week by week basis. So that's what to say. Kevin Lyons will be back in the market next week and looking to lend on everything they were lending on before.
Okay.
But I'm of the opinion that out of all this, I think this social housing sector will really take off, and there'll be a lot more demand.
Yeah, we've looked at it. We've had an HMO that we were getting almost 3 times normal rent. That was like a halfway house to people that were released from prison but on tag. But they had to have a member of staff present, and yeah, that was exceptionally high rent. Now, when they're paying you a premium on the rent, the banks don't always take that into account because of they worried in case it come to the end of a contract and then you can't replace it.
Fine.
But that's more.
I've actually changed my strategy now on this project. Strategy initially was for private rent, but now since I've spoken to a couple of agents and people that work in social housing, I think it's a better, in my opinion, the guaranteed rent and not having to pay any of their bills, or minimal, just paying your EPC and your gas check and electric checks. I think it's a much better model.
Yeah, if it's direct to the association, you've got to be careful if it's because if they're vulnerable and they're paying you the rent straight to you, there's quite a lot of complications. At one time, I've got an article in a local paper where I was the 8th largest private sector housing landlord in the UK. So we had it fairly nailed down. So if you do want to have a conversation about this, then drop us an email and we can. I'm pretty sure that we're going to be able to point you in the right direction. Or if you're doing something that might have a catch somewhere down the line that we already know about that you might not, then we might be able to save you from doing something that you wish you hadn't later.
Sounds great. Thank you very much.
Okay. All right. Thanks, Richard. G, we've got quite a lot of questions building up. So, are you finding any restrictions on mortgages for larger HMOs?
It's the same really, whether you're looking at 6 or 20 or 40 bedroom at the moment. They are just, lenders are a bit concerned as to where the market's moving and what the valuation is going to look like on these, and they're just sort of managing their own risk profiles. So no is the answer to on larger ones, because it's the same as whether you had a 6-bed or a 25, 30-bed HMO. Things are the same across the board. So they're just restricting lending at the moment on HMOs, and they're being very careful with managing on a case-by-case basis. And like I said, certain lenders are just completely out of the HMO and multi-unit block market.
Okay. Peter's asked approximately how long from first inquiry to mortgage offer?
For a standard buy-to-let, at the moment, it all depends on valuation really, I would say, but we can, looking at the moment, probably about 3 to 4 weeks at the moment. Normally that process is probably 2 to 3 weeks, but at the moment lenders they've furloughed a lot of staff. They are getting underwriters to do admin work because they're having to utilise their workforce like many other businesses in the UK. So timescales and SLAs are a little bit longer than normal. So whilst they're not taking as much business in, they don't have as many staff on the ground. So I'll say if we have 4 weeks from inquiry to offer, that should be sufficient.
Okay. Trevor said, what is available for a first-time investor?
Well, if you're looking at a standard buy-to-let, then everything on the market is available as long as you own your own property or own a property in the UK. There are lenders out there who are lending, like the mortgage works at the moment are lending 75% loan to value with no income requirements at the moment, as the standard process is. You just have to have had an SA 302 and had a tax return in 1819 and paid your tax that you're supposed to have paid. I got a mortgage 2 weeks ago for someone who declared £5,000 in 1819 on a standard buy-to-let. So they are lending at the moment. If you're a first-time investor, as long as you own your own property, there are options out there.
Okay, and they took something from 1819, did they?
Yeah, they won't pass it off. 1920 hasn't it isn't required yet. You could have done it if you wanted to, but it's not required until January. And I think
I didn't know
Chancellor,
that went over your head. I didn't think they did mortgages in 1920s.
sorry.
Okay. Right now, I've got a question from Catherine, and it's the question is, can you see any commercial properties having to sell off their assets? So basically, any companies like shops, restaurants, that type of thing, I would imagine this is the question, having to sell off their assets due to the current business climate.
I mean, Glenn obviously is in a position to also have his great insight in this as well. But in my opinion, I would say that yes, there probably will be. I know that there are lots of leniency at the moment with the government allowing people to stop business rates and take business loans, and I think there will be businesses who come to a position where they run out of cash and they run out of time, and they will have to sell off their property, will have to sell off their assets, because they will be left with no other choice. So yes, I do believe they will have to in certain cases.
Okay, and Catherine, if you go back, watch the recording of yesterday's webinar where I was speaking to Joshua Jackson, who was a Rick surveyor and has been an estate agent in London for 10 years, and he's an investor, and he's actually specifically targeting businesses that have got, that own properties. So definitely have a look at yesterday's recording. Amric says, what sort of rates are you getting for a day one remortgage, and is it with mainstream lenders?
Answer is no, it's not with mainstream lenders. It never has been. Mainstream lenders won't do day one refinance. They will need you to own a property for at least 6 months before they will look at it. We're looking at 2.99 at the moment, interest only for a 2-year, 3.49 for a 5-year fix. That's at the moment with the mortgage lender who are looking to do that. But a lot of lenders aren't in this market or coming out of the market at the moment on a lot of deals. But I'd say in a 2-year fix is at 2.99 and 3.49 for a 5-year fix for day one.
Okay. Justin, who I think you're dealing with at the moment, Justin Goff, asked a question relevant to his situation, which is, what is the current scenario with contractor mortgages with low loan to values?
It's a very good question. Regulated mortgages, which is everything that's residential, so buy-to-let isn't regulated with FCA, but residential is being looked through the fine-tooth comb. Contractor mortgages are still going through as per normal, so all you need is a contract and a day rate, and they will lend on a multiplier of that day rate. They don't need an SA302, they don't need bank statements. Specifically, if it's below $500,000 on the loan, they will not ask for bank statements. That is as it currently stands. I don't know if that's going to stand on Tuesday when everyone comes back to work, because things are changing. I do anticipate that this market will change at some point. I said to Justin last week, and he said the same thing even before Corona as well, saying it's a loophole that is open at the moment that I anticipate is going to be closed at some point, because contractors, whilst they do get great tax benefit, and they do have that luxury of getting an increased amount per month on a day rate, they are the first ones to be sacrificed in a corona or a pandemic as we're in right now, because there's no way. There's an easy way for an employer to let a contractor go than there is an employee. They don't have to furlough them. They don't have to worry about that element. So yeah. I think lenders will start to think, actually, are these contractors going to be getting improved contract year on year, and are they going to remain with them? So I think whilst it's still going, it'd be a good idea to get them in now.
Yeah, okay.
But I do think they're going to close the loop on it at some point very soon.
This panel, you arrange introductions. Okay, so I've had a question from Anthony Brown, who says, hi, I've had 4 desktops, Anthony, I imagine, with Shawbrook grind to halt, even though we had valuations done prior to lockdown. Maybe I've had 4 deals with Shawbrook grind to halt, even though they had valuations prior to lockdown. They're now saying they will only buy out the bridge company, but no more until things settle down. Can I do anything about this?
We can look at other lenders. We'll start you at the start of the process again, but if that is their take on it at the moment, then that is their take on it at the moment. Like I said, every lender is changing criteria on a daily basis. I would probably say if you've gone that far with them, it would probably be worth holding on, because at some point in the next, I would say, next week to 2 weeks, their outlook on that sort of thing will most likely change, because it's all waiting for this government, the next government decision on when they can improve people going out on a health check. Because if people can start to go to work in the next sort of 2 to 3 weeks, then it's going to increase lending back to where it was, because the market's going to move again, isn't it?
Yeah, sure. It's a little bit like trying to draw a picture of a sea and it's moving around. Right. Prince asked the question, how do you raise finance? Oh, Prince, that's just a mortgage application, and you're either going to be mortgageable or not. But sometimes you're mortgageable with some lenders and not others. Gareth has asked, I've got a lease option property which I want to mortgage out. Are there mortgages doing this? So if he's leasing a property, maybe 5 years, 10 years, 15 years, with the option to buy it, okay?
Yeah.
I'm pretty sure he can have the right setup with the owner to. I'm sure there's a way around getting 100% mortgage on the property, but technically, if it's got an option to buy it at a certain figure, that's going to be the buy price, which is probably going to be lower than market value. Are lenders aware of the fact that if someone's got a lease option on a property from 5 or 10 years ago? I mean, I've got properties that I'm on repayment mortgages, so I've been paying off the mortgages over the last 10 years, and there's the loans have dropped quite significantly. So let's say I've got 60 grand mortgage on a 260 grand properties actually. So I sold it recently for 262. But if I wanted to actually refinance it, and the value's 262, but my purchase price is under 100, where are the lenders going to be when you're doing that?
Well, they're going to be at the purchase price. I'm honest. That whatever we tell them is the purchase price is going to be the purchase price. So, if you've owned the property for that long, there are ways around.
You're not owning it; you're controlling it. I think that's a question, Gareth, off of the recorded webinar.
Exactly.
So moving on, and he says, does Ajeet think that mortgage deals will be good once all this passes, maybe in 2 to 3 months?
Yes, I do. I mean, the thing with this situation, I said this last week as well, is that this isn't an economic issue, this is a health issue. So as soon as people can get back out and get back to work again, yes, I know people have been furloughed, I know that people will be out of work, certain people, but the majority of the workforce will either be hired back by their own company again, on their full contract again, maybe on a slightly less salary, but it's just about getting people back out to work. So as soon as we can get the health issue sorted and get people out again, lenders will be back in the market again. They're just nervous at the moment. And in 2008, which is a question I'm getting asked a lot of people say, well, what happened the last time we had this situation where lenders weren't lending? That was driven by the banks overexerting themselves, not having the cash to service their loans and servicing the mortgages and the outgoings that they had, so they had to borrow from the Bank of England. That isn't the case this time. They've all got the cash, they're all sat on the cash, they are in a very strong position. They're just getting nervous about the market, and that's why they're capping loan to value at 60%, because they think the market's going to take a dip. I know everyone has their own take on that, and that may not be the case, but they're hedging their bets to say if it does take a dip, we will cap lending at 60% so that we don't have our negative equity.
I've seen forecasts.
Actually, yes, I do think lenders will come back into the market once we get out of this coronavirus situation.
Okay, I've seen the RICS report, the RICS surveyor's report, reckons that we're going to have a 3% drop. I've said I think you're going to have good deals available for 3 to 6 months after this has happened. I know Joshua yesterday, the London estate agent at Rick Surveyor, thought it'd be more like up to 9 months there'd be deals available with people selling and bailing out of properties. So who knows? As I said before, I looked into my crystal ball, I rubbed it with my glove, and it was still cloudy after I rubbed it. So hey. Right, Krasimir, I think it's more of a statement than anything. He's been told lenders do not like DSS, well, that's definite, or blue chip companies like Serco, ex-prison and tenants, as they are high risks. Is that myth or true?
Again, a bit like Sergo, it's a contract that is in place, so they obviously wouldn't like prison people as their standard protocol, but if you've got a contract that is guaranteeing the rent for X number of years, then they will take that into consideration. They will understand that actually could be that is something they will lend against. But yes, they don't like DSS at all, and they don't like people who are out of prison just to lend straight away to.
Okay, cool. Gareth, you said, how do you get direct to social housing tenants? I think that's a whole different question, and it's not really an Ajeet question. Normally, if you're advertising your property and housing benefit tenants apply to rent it from you, that's how you go like that. Are you talking about individual tenants, or are you actually talking about like associations or whatever, housing associations and corporations renting them for DSS or social housing? Right, here we go. Juniad's saying about advising to purchase using a personal buy-to-let or via a company. All right, Juniad, so first of all, we've got repercussions down the line. If you're buying personally, potentially you are not going to get interest rate relief on your mortgage. So if you've got £1,000 a month rent coming in and a £500 a month mortgage, you're going to pay tax on the full £1,000. But if you put it in a limited company, you're only going to pay tax on the £500. Over to you, Ajeet. Buy to let or via a company at the moment?
So at the moment, it is the same as it was before in terms of that concept. They are lenders who are lending on both limited company and personal buy to let. So speak to a tax advisor if you have one who will advise you on the best process for you. But they are lending on both limited company and personal buy to let.
Okay, cool. Right, Trevor asked earlier on what is available for a first-time investor, and then he's added another comment: what if I don't own my own property?
A little bit more difficult on this. Normally in Corona, it was there are lenders out there who would happily lend to you. Again, people tying up on criteria. You're probably limited at the moment on loan to value to 60% right now, and they wouldn't allow you to 75%. But it's still possible to get lending if you don't own anything at the moment and you're looking to buy a first time out.
Okay, cool. Palmetto said, can you get development finance if you have no employment records due to working offshore? Development finance, Palmetto, is just very much similar to bridging, and they're only really worried about the security. So they're not really that fussed about you at all. They're just worried about what the security is. So if the property is okay and viable, then they're going to more than likely be lending. Anything to add to that, Ajeet?
That's fine. I mean, if you've been offshore as well, I mean, in essence, you're working for a company at that point. If you can improve your employment record and where you've been, even if it's not in the UK, again, you're still a viable candidate, even if it's not development, even for a standard buy to let. If you can prove that you've been employed elsewhere or offshore, they will still look at you because you've been employed.
Cool. Shan has said, I have 2 properties in North of England, bought in cash and gone through full refurbs. Can I get more remortgage, or can I take mortgages now he's owned them for less than 6 months.
Yes, you can. Yeah, the lenders, so the mortgage lender are looking, they will do day one refinance, so they will look at that definitely right now. Keep a schedule of work, which I'm sure you've got, and receipts, and they will give you the full market value, or what they deem is the current full market value, which hopefully is where you deem it to be. But yeah, they will do that.
Okay, and he's also asked for contact details. So if you email me, Shan, I'll pass you on Ajeet's contact details. Prince has come on and said, so that must buy land and property commercially for sale whilst coronavirus is going on. Okay. Well, look, Prince, at the moment I'm buying a plot, 1.25 million, built in 5 flats on it. I'm getting a bridge and I'm JVing with different people for the upfront deposit money. So everything is still moving if you go to the right places, basically. Damien's asked for your contact details again, Ajeet. So Damien, again, if you email me, glenn@glenarmstrong.com, don't forget I've got 2 N's in Glenn, and it's got Glenn twice, so I'll forward it on to Ajeet. What is the best these days to go for, a 2-year fixed rate or 4-year? So I think it depends, and a 2-year or 5-year, the benefit of doing a 5-year mainly is the fact that the rent rate or the pay rate on the mortgage, the ratio that they lend based on the rent proportion to how much the mortgage is. So, what we on 5-year, 125% in limited companies, Ajeet.
That's right, so 125% at pay rate. So if you had a 3% mortgage, it would be 125% at 3%. On a 2-year fix, they stress test it harder if you don't get your tax relief. So you would get that at 125 at 5.5. So the benefit of a 2 versus 5, the 2-year will be cheaper. Always is cheaper, but the benefit of doing a 5-year is, whilst you pay more in rate, you generally get more on your loan size, because especially down around London and surrounding areas, the yields aren't good enough to support 2-year generally.
Okay, I've got an interesting question for Shakur. He said, okay, if the mortgage company do a desktop survey, give you the mortgage, you get the mortgage, and then it turns out to be a structural fault in the property that the surveyor probably would have picked up, some sort of subsidence or something like that. Where's they going to be with that?
They're looking at taking indemnity out, is where they're looking at to cover themselves. At the moment, my thoughts are that they're going to want to come back out to the property once things are available from just a desktop to get the offer out. Once they're available to go out and look at it from government guidelines, I think they're going to want to come back out again and retrace their steps on it. But if there is a structural survey, then, like I said, I think that's why they're hesitant to desktop. It's not a standard carte blanche. We will do a desktop on every single property. But if there is a structural problem, then they're going to take indemnity to cover themselves.
Okay, cool, thank you. Right, we are kind of running time at the moment, so I'm going to try and answer some of these questions very quickly, and if I get stuck, Ajeet, I'll come over to you. Ben says, is there any news about values going out to value on the bridging side of things? Is this a delay strategy from their behalf to see what the market's doing, or is it purely the COVID and looking after this stuff? Is that the government have stopped people from doing it? I think some valuers will go out if the property's empty. Mm-hmm. Certainly, if it's a plot, there isn't a problem because they'll just do it straight off the drawings and Google Earth or something like that. So, anything to add to that, Ajeet?
Agreed, 100% agreed.
Okay. So Kurt says, if I get an 8% mortgage, will I still be able to get development loan to convert to HMO? Still be able to get it, right, okay. I think the question is, can I get an 80% loan to do a development to an HMO. I think you're more looking at development finance companies, and you're probably talking about 75% or maybe even 70% when you're actually borrowing the money to do the fix out of a commercial property. Anthony Brown, how can I get hold of Ajeet? Again, email me, glenn@glenarmstrong.com, and I'll forward it to you. Palmito said, but now there's high consumer debt, which if people go into arrears due to loss of jobs, then banks will be in a right pickle again. Look, Palmetto, we're now talking into economics, and yes, there are going to be issues going on, and there are going to be opportunities. I think if you use my creative strategies a lot more time, just like many of the deals that I've been doing, you can actually do a win-win deal. Literally, I'm buying a property off someone on a delayed completion at 1.2 million. I am converting it into 3 flats. They're keeping the ground floor flat, providing we get planning. So therefore, it's the same value. The other 2 flats, one values at 1.2, one values at 1 million. So there's 2.2 million cash I'm generating. 400 grand cost to doing the whole thing. However, I've agreed to pay their mortgage of 328 odd grand off. They were 28 grand in arrears. Okay, so therefore they've gone from being in arrears on a 1,400 square foot property worth 1.2. They're going to end up in with their arrears paid off, their mortgage paid during the process, their rent paid while we're doing it, and I'm giving them 20% of the profit, which is estimated, if I take 800 off of 2.2, that comes to 1.4 million. That's the profit. Giving them 20% of that, it's still leaving me with over £1 million profit. So it's a win-win for everyone. They are more than happy, and there is going to be a lot of opportunity if you're capable, or if you're on my mentoring program. I'll talk you through how to structure things to make sure that it's a win-win. Okay, thanks. It's not easy getting lending on social housing as vulnerable tenants. Right, that's Stuart. Although I did just secure pre-corona. Okay, thanks, Stuart. And then Mohammed Mir said, can we get commercial mortgages at 20% deposit? So 80% commercial mortgage.
Difficult. It was even difficult to get it at that rate pre-corona. So I would say if you work to 75 gross, probably 70% net, that's probably going to be the benchmark, especially now we're in a coronavirus situation.
Okay, right, now I've got a totally different question. Palmito isn't specifically mortgage related, but there is a house with a building plot. Would you say it's better to buy the plot separate to the house to save on stamp duty, for example? If house and land is 850, but vendor wants 375 for the house, then it's better to say the buy cost is 375, house value price. Is there a way around it? I would say if it's 375 for the house and they want 500 and 475 grand for the land, you need to be building a £2 million house for that to work out, just off the top of my head. So I would say, Palmito, that that's a deal that's not going to work. If you drop me an email, I'll add you onto my Tuesday's webinar, and where I go through all my mentees' deals every week, and I'll do a deal analysis on it for you and tell you where it is. Yeah, look, the vendor's just said it was purchased for 375 as it cost the house, but the vendors have got planners of the land, hence 850 asking price. That's including the house. Look, I don't know, Palmito, until I've looked at it. Okay, it's got planning. It is 2 million GDV, so it looks like that might be okay. I'll have a look at it for you. Okay, Ajeet, thank you very much for joining us. Have you got anything you'd like to add to the conversation this evening? Any passing wisdom summary?
I think there are deals to be had out there. I agree with Glenn completely. There are lenders who will lend out there, and there are deals to be had. Because there are deals to be had, is finance that we can arrange. Whether we do a bridge loan, whether we do a term loan, there are methods for us to get you the finance that you need to get your deals over the line. So definitely pick up the phone, have my contact details. I'll take any inquiry you need, and we can definitely look to finance any deal that you have that is proceedable, because there are lenders who are lending right now.
Okay.
Don't believe all the media. Right?
Cool. Thanks, Ajeet. Thank you very much. Right, just to summarise, thank you for joining us this evening. Hope you all have a great bank holiday. We are not running, we haven't done these lockdown webinars on Saturdays and Sundays, and we're not running one on Monday. I do have on Tuesday a solicitor who I'm talking to, Mohat Chopra. He's going to be talking about how currently, from a solicitor's point of view, how mortgage market, everything's been affected. So it'd be interesting to see his take on it. He's going to share how some of his clients are still getting deals through. So I think that'll be very enlightening and a not to miss webinar on Tuesday evening at 6. Meanwhile, I'll thank you one more time, Ajeet, for joining us this evening.
No problem. Thanks.
So a very good night to everybody. Have a great bank holiday, and most of all, stay safe.
Yeah, thanks.